Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Friday, January 2nd, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing to end the first trading day of the year. The S&P 500 settled at 68.46, down 0.74%, while the Nasdaq 100 fell 0.84% to close at 25,250. Crucially, the session was driven by consolidation after a strong end to the prior year, but the real story right now is in the macro assets. Right now, the 10-year Treasury Yield is trading at 4.15%, ticking slightly lower. This dip in yields is providing a key tailwind for growth and tech stocks in the pre-market. The U.S. dollar index is firming, up about 0.1% at 98.17, while crude oil is softer, trading around $56.90 a barrel. The combination of lower yields and a stronger dollar creates a mixed signal for equities, but this morning, the market is clearly taking its primary cue from the rates market. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been active as trading resumes for the new year. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished down 0.37%, weighed down by a stronger yen and some profit-taking. Meanwhile, in Greater China, the Hang Seng surged an impressive 2.76%, while the Shanghai Composite finished effectively flat. The significant outperformance in Hong Kong suggests a release of pent-up demand and positive positioning for the new year, particularly in the tech sector. In Europe, major indices are trading cautiously higher. The price action is digesting a slate of manufacturing PMI data. While French and UK figures showed modest improvement, German manufacturing PMI contracted for the first time in 10 months, signaling potential weakness in the Eurozone's largest economy. This provides a somewhat soft lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are pointing to a strong open, reversing yesterday's losses. S&P 500 futures are trading up 0.57%, while Nasdaq 100 futures are leading the way, up 0.95%. The relative performance, with the Nasdaq nearly doubling the S&P's gains, is a direct consequence of the lower 10-year yield. This rotation back into tech suggests investors are re-engaging with growth themes as borrowing costs ease slightly to start the session. The daily catalyst. Looking ahead to the session, the economic calendar is relatively light, placing more emphasis on technical flows and data from overseas. Investors are focused on three key catalysts. First, the market will continue to digest the implications of the mixed European PMI data, especially the contraction in German manufacturing, which could influence sentiment around global growth. Second, the final S&P Global U.S. Manufacturing PMI will be released after the open, providing the main domestic data point of the day. And finally, with no major Fed speak scheduled, market direction will be heavily influenced by institutional positioning and fund flows typical of the new year. With a light economic calendar, flows may be driven primarily by technical positioning. Given the overnight setup, with yields providing support, the market's path of least resistance appears to be higher for the open, particularly for the technology sector. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.